Remember Schwarzenegger in Kindergarten Cop? The kids were bothering him because he didn't feel good. He had a headache. And they asked him if it's a tumor, and they kept bugging him. And it's not a tumor. Well, I'm going to tell you, it's not a bubble. Not a bubble. Not a bubble. No, the first half of this year, this is not a bubble environment. And a lot of fools that parade themselves on TV like to, call out different things, make comparisons. They grab .com. And some of these people that are actually doing it, I think that they were probably in middle school when the .com bubble was actually taking place, and they're opining on the markets today in the .com bubble like they're some sort of authority, and they don't know a damn thing. S&P 500's up what 13, 14%? I don't know, over the course of the year. NASDAQ's up 30%. And there's talk about, it's been these few tech companies that have driven this rally. And that's true. The overall breadth of the market has not been that strong. But again, I think that will slowly but surely change over time. And you're going to see some rotation. We talked about that with proper asset allocation. But let's talk about bubbles, shall we? The idea that the valuations are anywhere even close to where they were during the whole .com run-up is patently absurd. Again, let's take a look at the numbers here. The price to earnings ratio, NASDAQ right now is 30. It was 100. That's right, 100 at the .com peak. And you got to remember, the .com peak, those companies, most of them weren't real. Most of them, they didn't have any earnings. I mean, that was a new paradigm. Earnings didn't matter anymore. They didn't have any earnings. They had CEOs with, a goatee and a foosball table in the break room, most of these companies. These companies that have run up, that are, sporting, I want to call it a rich valuation, call it a rich valuation at 30. At least they're real. And again, it's nowhere close to where it was. The price to earnings of the technology sector of the S&P 500 back in the .com era was 80. It's 35 now, and interest rates were higher back then. And again, the markets can continue to move higher. Do I think that they'll probably take a breather based upon all sorts of uncertainty with the economy? Absolutely. There's no doubt about it. I wouldn't be surprised the market goes sideways for the rest of the year. And quite frankly, I don't care. Doesn't matter to me. Doesn't matter to my clients. It really doesn't. It's where it's going to be 5 years, 10 years, 15 years from now. But the idea that there's some sort of bubble is crazy. Yeah, sure, the market has run up. Can we have a pullback? Absolutely. No doubt about it. Can I time it? Nope. Can anybody else? No. They can't. I mean, you take a look at some of these names, these top analysts at these firms that they paraded on at the beginning, especially these bears. I mean, they were on all the time. And the arrogance which they make these predictions at, I'm like, are you kidding me? You're that sure of yourself? Really? You're that sure of yourself? I don't even understand. Again, I understand the business of Wall Street, and they want people moving and grooving and doing all sorts of things. The only way you're going to be successful, people, is if you put together a portfolio, you own great companies, and you do it over the long term. That's it. Did anybody really expect a run up in the NASDAQ by 30% in the first half of this year? No. What were we told by the Wizards of Smart? Gotta be a recession. And they're still in search of recession. We'll see. If it comes, it comes. The question is whether or not it's going to matter to you. And you want to get into a position where you're like, okay, recession. Market backed off 10% after running up. No big deal. I'm dollar cost averaging. I'm just going to own more high quality companies. If that's your thought process, you're actually doing the right thing. WatchDog on WallStreet.com.